Hello and welcome to the Truth About Real Estate Investing podcast for Canadians. I'm Erwin Szeto, four-time Realtor of the Year to investors in Ontario. I've been a landlord since 2005, so that's 20 years and counting. Getting close to 500 million in real estate transactions of income property. Proudly, no new construction rental properties. My wife and I formerly had an 8-figure portfolio in real estate. Why formerly? Because I'm currently selling my Ontario properties to buy somewhere landlord friendly for value and positive cash flow. Like many experienced investors in Canada, I'm asking the question, what's next? And I'm actually following through and taking action on those things too. Some can say I'm ahead of the curve. I honestly think I'm way behind the curve. I wish I was buying in the US back in 2008, but I digress. Some folks out there are becoming developers, which is super cool. We need more developers in Canada. Some are moving their investments to landlord-friendly places like Alberta and the USA. Everyone wants to know how to minimize their tax when selling and what to do with the profits from sale. On this show, I bring you strategies, stories, and an expert to help you build wealth, avoid costly mistakes, and reach financial freedom faster. In Canada, in US, in Mexico, in Costa Rica, in Europe, and beyond. Let's get started. Good news. Good news is that CMHC says that today's condo market is not a repeat of the crash Toronto experienced in the late 80s and early 1990s. Unlike that era, today's economic slowdown is milder, employment remains stable, and developers face stricter pre-sale requirements. Buyers also undergo stress tests that are far more rigorous than those that existed in the 1990s, thus reducing risk of widespread defaults. Combined with pent-up demand, a growing economy, and strong immigration-driven population growth, CMHC sees the potential for a balanced and eventual rising condo market. Now, I know a lot of you don't own condos. You know, if you've followed the show for a while, we've spoken quite negatively of negative cash flow speculation strategies, but more of the point is this is encouraging news for all of us who are current property holders in and around the GTA. This probably also makes sense for those of you in Vancouver, in the greater Vancouver area as well. This is possibly a signal that it's time for some people to get off the sidelines to go deal hunting while inventory rates are elevated. And for people who are holding property like me, this, again, if condos are going up, then folks with property on land like I do, and some of you out there as well, if condos are rising, that probably means our housing prices are rising as well. And for those who want us to exit, hopefully that rising market that we all want to sell into is coming sooner than later. What do you think? Does anyone else out there think differently from CMHC? Is the correction going to take longer to happen? Or is this thing going to get worse? Or is this going to get better sooner? Let me know what you think. A lot of you have my email, and pretty much all my social media is open. I've got the link to the CMHC article in my show notes. You can simply look it up. Is Toronto condo market downturn repeat of 1990s? Simply Google it, CMHC, you'll find it as well. Now, for those who prefer passive investors, for those of you who are passive investors who want to invest remotely, now might be the time for you to explore US income properties through platforms like Share, the easiest way for Canadians to build and scale a portfolio of professionally managed US income properties. If anyone knows an easier way for a Canadian investor to build a portfolio with 100% ownership, 100% control, and full professional management, I want to hear from you. I'll have you on the show because in all my career, an extensive career, over 400 plus episodes on this show, I have yet to find it. I also offer a complete free guide on how a Canadian may invest in the US. I know others out there charge $200 to $700 for courses on the exact same content inside my free guide. You can check it out. I have the link in the show notes. Now, we do have a new podcast episode, as always. Luis Rivas, special guest Luis Rivas. He's special because he is the head coach of Wealth Genius. He's a seasoned real estate investor, coach, and former federal employee government who made the bold move during COVID-19 to retire early after 22 years of public service to pursue financial freedom through real estate. He cashed in his pension to use it for private lending. That is bold. Today, Luis is the head coach of Wealth Genius, as I mentioned, where he helps Canadians build sustainable cash flowing portfolios across Canada and the US with a focus on multifamily properties, private lending, and strategic market selection. Luis shares his journey from pre-construction condos, how he considered that speculation, to now scaling multifamily investments in Saskatchewan and Ontario, and now expanding to the US and into markets like Texas and self-storage. His coaching emphasizes practical underwriting, cash-on-cash returns, and legacy planning, helping students design their lives with intention and clarity. He'll be speaking at the upcoming Expand conference hosted by Wealth Genius. That's happening October 31st to November 2nd in Mississauga. The event covers real estate, options trading, infinite banking, and of course, my favorite topic, US investing strategies. I also like options trading as well. You can follow Luis on Instagram and YouTube at Cashflow Rivas, and just simply Google Wealth Genius if you're interested in the Expand conference. Very easy to find. Please enjoy the show. Luis, thank you so much for doing this. What's keeping you busy these days?
A lot of coaching. First of all, thanks for having me. I really appreciate this. I fill up most of my days with coaching. I coach a lot of students, and I have a family, and I'm a pretty social guy. I try to go to a lot of events if I can, visit friends like you, and but predominantly, like it's coaching. Coaching is my my big part of my day.
Now let's bring the listener on the journey. Like you used to work for the federal government, so you live in Ottawa,
I do.
and you used to work for the federal government for quite some time.
Yeah.
And
Yeah.
did your wife work for them too?
Yeah, actually, that's where we met. I broke my cardinal rule of dating back in the year 2001. I said I'd never date anybody from my workplace, and then boom, and we met in 2000, and then we started dating in 2001. I worked in the government for 22 years, and she worked in the government for 21, and then we retired. We pulled our pensions in amidst COVID, and made a complete lifestyle change.
What was that like, and what was the decision making process?
Uh, it
That's
was
quite the pivot.
it was terrifying, and it was exciting, but it was terrifying all at the same time. I compare it quite a lot to like being in jail and being paroled, and then getting out of jail, and you're shocked with like the real world. And so during COVID was a real tough time. My We have two young boys who were in school and daycare, and during COVID, as you know, everything was shut down. Everybody's online. So my wife and I was a manager in the government, and she was working, on it with the technical team. They had calls like every day, like every morning at 9 o'clock, right when the boys were logging on, right when I was in meetings. So she was like having like panic attacks pretty much every day almost, because she was able, like, having to manage all three things at once while I was on meetings. So I told her, just retire. Just I'm starting to coach. I'll do coaching. We'll figure it out, but this can't continue just because of your sanity. And she went the first year in 2021, and in 2022 I took the plunge, and for a whole year afterwards I was in a lot of anxiety mode, kind of hiding it, and just second guessing myself. Did I do the right move? Did I make a mistake? What did I do? Like, after the year passed, I really uh congratulated myself and us for making that big plunge, but it was scary, man. It was scary. Yeah.
So what helped this? So you mentioned you basically cashed in your pension. Are you pretty close to full pension at that point? 20 plus years?
So full pension would have been 30 years. So I was 8 years early. So we pulled them out, and we started private lending, like unregistered mortgages, like mortgages, not P notes, just doing like, leveraging the lira, leveraging RSP, leveraging TFSA, and just to create a little bit of extra monthly income. And I started coaching. I started coaching part time, and maintained my job for a year. And then I realized I couldn't do it anymore. It was like 2022, and COVID really. I think that's why I got a lot of my gray hairs. At least we still have our hair, Erwin. And so
Yeah, yeah,
that's
yeah.
what it was like, man. It was like very uncertain, and it felt like, for me, it felt like I was under house arrest, with all the restrictions, and really, really scary time. You didn't know, the economy. You didn't know if rents were gonna maintain their consistency. A lot of unknowns, a lot of lessons learned too, and how to prepare myself for, if this ever happens again.
You mean exiting work, or if COVID happens again?
If a COVID or another phenomenon, a pandemic or some sort of something happens again, there's a lot of lessons learned from that from me, and so I'm looking to prepare myself, and I think a lot of Canadians should be doing the same. All
Hmm.
Canadians, really.
Yeah, there's always the statistic I've been following my whole career. I've always had an interest in personal finance, and I remember early on, those without a pension, a good percentage of those without a pension won't ever be able to retire. Uh, but what I've noticed through the time is that that number keeps going up. It used to
Yeah.
be under 50%. Now we're well over 50% of people who without a good pension, which would be like defined benefit pension, which is typically only available through government or teachers or hospital employees, like typically those folks.
Right.
Uh, yeah, without that, like, yeah, people need to pay attention more than ever.
Yeah, they do, and the whole pension situation is in jeopardy, in my opinion, and it's a controversial topic. I don't know if your listeners would should hear this, but the pensions, they have to be sustained by a working class, like a workforce,
Hmm.
and I believe that that's part of the main driver of the economy, of the economic drivers of having immigration. It was so big, was to bring, new Canadians into the fold to help pay for taxes and to help pay for pensions. And if that's curbed or completely paused like it is right now, it's doing a lot of disruption, not not only for pensions but overall, right? It's a very macro economical situation, and I like to look at the macros, the trends. I'm a big trend guy, and I don't know, things are pretty loopy out there.
Yeah, I couldn't agree more. Dana Foch, I'm trying to bring it up, but Dana Foch shared a graph. It's from National Bank of Canada. How investment in machinery has completely diverged. The Americans have continued to invest, so that their productivity continues to improve, and their productivity continues to improve to the next level because they're investing heavily in AI and data centers and energy creation to power all of that. Versus we're struggling to get a pipeline built in Canada.
Yeah, you mentioned AI, and AI will be is taking jobs. And so what is that going to look like? We have to really we have to talk about these things, and not a lot of people are talking about it.
Oh, I
Now
talk about it all the time.
you talk about it all the time because you know that it's not. There's a statistic that says, like, in the early '90s, when the internet was really starting to take off, becoming like a mainstream thing. Um, some people said, "Oh, it's just a fad, and it's not gonna, it's not gonna stick. It's gonna go away." And those people got left behind. What's happening right now with the AR revolution is going to be tenfold or hundredfold. If you don't not only accept it, but if you don't thrive with AI, you will be left behind. It's not a question of if; it's a question of when. And it's a conversation we need to be having at the dinner table and at the kitchen kid table, like everywhere. We should be learning how to prepare for that.
Yeah, I use this stuff every day.
Yeah,
And there's AI in the background of this application that we're using right now as well.
yeah,
Yeah, I don't, I can't think of anyone I've spoken to who doesn't think AI is for real. So this isn't like the dot com. This isn't like the credit crisis. This is different. There's a lot more people are understanding that this is a big deal. Like no
Mm.
one, like when manufacturing was a big became a big thing. Like I don't think they had many doubters about that either. This one, this AI boom has legs. I don't know. I'm not saying that the stock market will keep ripping the way it is, because there's always been a correction. So, every cycle, every boom, including like railways, when railways were first a big thing, they built too many, and then there's a correction. Dot-com bubble again, websites for everything, and that crashed. And we'll see it again with AI. With all these AI companies, won't make it either. But yeah, but otherwise, I still think this still has legs. There's going to be lots of survivors from this.
Yeah, I agree. It's worldwide.
So tell me about coaching. So I think first off, in your own journey, I think that the fact that you're able to leave your work, I think that was something that people were probably interested in, how you're able to retire from work. Uh, but you're able to do so from turning over your pension into private lending.
That's part of it. My coaching and my investments. We really focus on having our coaches be practitioners. We can't just be theorists. So that's part of my it's a combination of income streams, I would say. And you know the goal is to continue to add income streams, until you die, basically. Um, yeah, that's something I've been struggling with. Maybe we could talk about that, or when, like, it's something I've been struggling with in the last little while, but especially like in the last like 90 days or so, is like the accumulation of wealth and leaving a legacy. It's something I've been borderline obsessing about.
Oh yeah, yeah.
And I watch the CEO. What is it? Diary of the CEO. Everybody talks about
I've
that.
heard that come up a couple times.
He's a British guy. He's a presenter. He's got a long form podcast, and he interviewed this professor who said that in 1,000 years, no one's going to remember your name.
Yeah,
And
fair.
I would say, like, probably within like 300 or 400 years, they probably won't. Maybe even less. And so, what good is it if I leave a legacy? Like I think the point is, like, spending time and building memories with my children, and having a time, and like FaceTime, and actually sharing moments, special moments, is a struggle, right? Because if I'm building the business, then I'm taking time away from that activity. So it's like a tug of war. I'm and I used to make fun of men who used to hit that midlife crisis, and they want to buy that Corvette, or that Ferrari. But I turned 50 this year, and I started thinking about a lot of different things, and Ferrari and Lamborghini are not one of them. I'd rather gift my kids buildings than cars. Um, but my wife's like, "You're going through a midlife crisis," and I can't disagree with her. I'm really reevaluating everything, all the important things in my life, and our future. It's on my mind every day.
Yeah, yeah. I couldn't agree more. It's actually funny. I was having a conversation with some pretty successful friends, including one gentleman who's a little bit on the younger side. He's under 30. And so the question was like, how much do you need to, how much is a good, what's your number? What's your number? Like, as in, like, what do you need to retire? My one friend said 6 million. The number 10 million has been going around for a while, especially if you're someone who's followed Grant Cardone for any certain time. So I have. So I always thought 10 million. And then just to share, here's some math. Because I don't know if you noticed, but we launched, Cherry and I are collaborating on a new business called I Win Wealth Planner. So that's financial and estate planning for people who want to be wealthy and the wealthy. And to clarify what wealthy means, like someone who owns their home and owns like two, three, four investment properties, they're generally considered pretty wealthy. Household income 200,000 and more. They may not feel wealthy, but on the global scale, they're absolutely wealthy.
It's true.
So
I heard that.
anyways, yeah, yeah. In the end, they always forget that. And they have a pension, another level.
Yeah, I
You will
heard
be able to retire. Most won't.
if you make more than 37,000 USD per year, you're part of the 1% globally.
Yeah, yeah.
Crazy.
And then for you're a homeowner, you've owned it for a while, you have a million equity.
Yeah,
you are very wealthy compared to the
yeah,
world scale.
sure. Yeah,
And then the unfortunate part is, I hear so many people talking about it, Canadians specifically, is how they will not retire here, and also how they don't expect their kids to stay in Canada.
sad. That
Yeah.
is that is a weird phenomenon. And I talked to my accountant recently for my, year to year stuff, and he's spending half of his, well, your wife's an accountant. I'm sure
Hmm.
her statistics are very similar. He's spending almost half of his week dealing with clients who are exiting Canada and preparing them on how to exit, because there's an exit tax. Not a lot of people know that, but the idea of so many people exiting Canada because they have to retire elsewhere, so their money goes further, or they're worried about crime, or they're worried about, there's a laundry list. It's kind of sad, and I'm an immigrant. I was actually born in Central America, and August 15th of last month, like just now, we celebrated our 40th anniversary of being in Canada, and Canada's changed drastically from that time. I mean, it is 40 years, so it is a lot of time, but it's almost unrecognizable. The landscape is completely unrecognizable, and I don't know that we're not trending in a good way here. It's not doesn't make sense. We're a G7 country, but we're like the most underperforming one.
Yeah, we're the lowest performing ones.
Yeah, like, that's what happens. We get relegated to the
We're worse than Italy.
and Italy's problem is that they live a long time, and so they have pensions, but the majority of them are living outside of Italy, and so it's like Nicaraguans and a lot of Salvadorians. There's more of them living outside, and so the money, like the pensions, going outside of Italy, and there's not enough young people again to pay, to supplement those pension plans, and so it's a real difficult situation.
Yeah,
And
and then
Canada
our
isn't
government just pumps immigration, but we don't really have the opportunity or nor the housing for them.
isn't that like nonsensical? It's just like a recipe. It's just adding insult to injury, in my opinion. I
And that's
were
the
you
challenge
in
with a
the
socialist society.
pardon?
That's the challenge with a socialist society.
Yeah.
There's not enough focus on growing the economy.
There's a bad connotation to being a business owner and to being even a landlord in Canada, where we're providing housing and jobs for other people. Like when they say let's tax the rich, like what they're really gonna tax is, look, those government employees. Like the people who are providing housing and the people who are providing jobs. They should be put on a pedestal for helping the economy, or at least treated like everybody else, but not demonized or villainized. Like it's not just doesn't make sense.
I couldn't agree more. No
We're
different when I have developers
socialized.
on
We're
the show. I always
socialized
say
guys.
thank you.
Yeah,
Like you take on so much risk to do what this market needs, which is provide housing, right? And at the
yeah,
same time, I think landlords should again also get thank yous as well. Like you and I are in Ontario, we subsidize our tenants' inflation because of rent control, right? No one's ever thanked us.
no, no, no. And meanwhile, everything else is going up, right? Taxes and insurance and utilities. It's going up.
Yeah, property tax. Yeah.
Yeah,
Ottawa's rolling out renovation, looking to roll out anti-renovation bylaw.
Ottawa, eh? Hmm.
Yeah. Yeah, it was just in the news this week.
So
So,
much
Luis,
extra money going out west. Go ahead.
yeah, that too. So, Luis, so you are a practicing coach. So, can you tell us the journey? How did you start real estate? What was your first real estate investment,
Oh yeah,
and
yeah.
when?
Yeah, so my wife and I were always interested in it, and we, as government employees, we had a little bit extra income, and we decided to buy two pre-construction condos. Does that sound familiar? In Ottawa, but this was back in like
Timing
20.
matters, but yeah.
Yeah, it does, big time. This was in 2013, so we took possession of the
Oh,
first one in 2015, and then the second one in 16, and they were bright and shiny and new and beautiful, and barely cash flowing. Like condos are like the worst investment in my opinion. It's like, when you factor in all the taxes and all the condo fees, you're barely breaking even. And so I guess the mistake we made was that we didn't underwrite it. Like we didn't know anything about underwriting, and what we were actually doing was not investing, it was speculating. We were speculating that the condo market in Ottawa was going to pop, and then we were going to have these valuable assets under, but they were not evaluated, they were not appreciating. The condo market, any market, excuse me, in Ottawa moves very slowly. It's like big a big animal. It just moves very slowly. It's not very volatile. It doesn't go up and down and spike up and down. And so we sold those two condos in 2017, because we were barely breaking even. And I kind of sat on my hands, and I sulked, and I felt like a failure, because I tried real estate and it didn't work out. And then that's when my good friend and mentor Alfonso Cuadra came, and he said, come to my one of my events. And I very reluctantly went, because I was so down on my luck. And my wife said, "What do you have to lose? He's your friend." And changed my life. And then I started understanding the keys that I need to understand in order to win in multifamily. And that's when we started. That's when we started scaling up, was in 2019. And all multifamily with partners, something completely different from what we had been, you know, prepared or indoctrinated to do by our families, especially my wife's family, because she's Italian, and they don't like partners. They don't like property managers. They like to do everything themselves. So they have a tendency to own like three or four single family homes, and then they kind of tap out, they ceiling out. And so I learned all these things. And then the business started to grow, and Alfonso said, "I need help. I need you to help me coach," which was an incredible opportunity and a very welcome surprise. And he started coaching me to become a coach. And I like we've been following a very regimented, internal process for how things work. And now we're becoming more mature in our processes. But that's kind of how it started. Um, that's It was kind of by accident. I didn't pursue it. It kind of found me. And it's totally a calling. Like it's a total like a it's from a position of service for the community. It's not to get, uber wealthy. It's merely to help other people. The way I see it is I'm helping other families become financially independent and changing their family tree and intergenerational story. um, Very rewarding for me. Something that was really lacking for me in the government. I was always the rah 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 guy, the inspirational guy, and like the solution guy, and that's not really exciting in the government. In the government, they want you to follow the company line and be miserable if you have to be miserable, and don't do anything other than the government. So I always had other things going on in my my personal time, like learning about real estate, and it's not really welcome in the government. So I didn't really belong. I was like a black sheep. Yeah.
Which is unfortunate because the largest growth area for jobs was government for the longest time, and now
Yeah.
it's no longer.
Yeah. And can you imagine what people? I know they were saying things about me. I know they were talking behind my back. They're probably still talking about me because I left a pension job that was going to pay me the golden hand. They call it the golden handcuffs, and I had the marks from the handcuffs for a while after I left. But I'm so glad because I feel fulfilled now. I feel like I'm getting. It's not just about the money, but I'm getting fulfillment, and fulfillment for me is a subjective thing, and it's a synonym for fun. You know, like one thing I always tell my students is it's got to be fun. If it's not fun, if it's just work, if it's just like grunt work, you're not going to succeed as much. It's got to be enjoyable. You got to get a
Mhm.
sense of like accomplishment and fulfillment out of everything.
Hmm. All right, this sounds kind of funny, but because we're talking about fun fulfillment, we're both Ontario landlords. So
We should
what?
get T-shirts. We should get T-shirts, Ontario landlords.
People will chase us with axes and pitchforks in the streets. So tell me about multifamily. What kind of multifamily? Where? Did you when you started multifamily? What did you like, and what was the strategy? And then bring me to today. What is the strategy today?
Um, the strategies changed a bit, but since the whole time when I started, it's been about underwriting properties and using the cap rate as the North Star. So when people ask me, where should I invest? I say, well, what are your goals? And so my goals were to have a little bit of appreciation and a little bit of cash flow on multifamily buildings in secondary and tertiary markets where it would make sense to hit between a 4 and a 6%, preferably like 5 to 6% cap rate, where the property management is included in that in the underwriting. So if the property management is in there and you're still getting, I see you kind of smiling there. If you're hitting that target, then it's a go. It's a green light to continue further. And so things haven't really evolved except for maybe where I'm investing and where I'm looking towards planting my flag next because it's not Ontario. I know a lot of people are not going to like me saying this, but and a lot of people are going towards the new build because they feel like they have a little bit more rent control, at least for the first 5 years. But it's still the numbers are really tight, and so as far as changing my trajectory, I would say I'm looking more towards south of the border right now, where the cap rates agree more with my goals. It's in line with more of my goals, and so that's kind of how it's been. It's been very like boring and non-glamorous, which is I think the best for me. I don't need it to be super glamorous, and if there's property management in place that is rock solid, I think that's huge. And if you're keeping tabs on the property manager to make sure that the property's NOI is increasing or at least not dropping, then it's a good situation.
Now,
Predictable.
sorry, when you started investing, were you investing locally in Ottawa?
Not in the Ottawa area, but in these outskirts of the Ottawa area
Okay,
because the
yeah.
cap rates are more agreeable. Ottawa's cap rate is, close to 4%, or at least it was at the time, and so real tough. And if you invest on the outskirts of Ottawa, the rents are still quite close to the Ottawa rents, but the price of the asset, the price per door is a lot lower.
Right.
Yeah.
Sorry, what was the year?
In 2019, we bought our first multifamily in Saskatchewan, and to this day, I still have not set foot in the in the province, and that's because management has been there from day one, and then I we started adding in Ontario in like secondary, tertiary markets.
And then what's your like your go-to strategy? Like 3 story, 6 story walk, 3 story walk ups. Like what? Paint the listener a picture.
Yeah, it's 6 units and up, so that it qualifies for commercial mortgage. If it's 16 units and up, I consider it to be the best because then typically 16 units and up can have a super site super on the property. This works well for like rural locations where there's not a big property management presence, so you can manage them from a distance if there's a strong superintendent in place. And my strategy has always been a buy and hold. And my definition of the perfect burr is you get all your money out after 5 years when the mortgage is time to renew it, or whatever your term is. Um, I know the perfect burr's typical definition, and it's not really my MO because I don't have time or energy to manage contractors and their BS, and uh, and it's just not like unless there's a property slash project manager, then I'll consider it. But it's always been buy and hold strategy,
Mm-hmm. Mm-hmm.
like 16 units and up.
Something for the novice investor, like in my own experience, like property managers and contractors come and go. Like my entire team has turned over many times
Yeah,
in my 20 plus year career as a landlord.
yeah,
Yeah.
a
And so people
revolving.
like, especially if they're in a rural area, remote market, rural, if they're rural, they have to be really careful because like if they turn over their team, like who's on the bench, who's coming off the bench to step up and take care of your property.
There's no backup, and you might have to fly to the property to plunge toilets. Like,
Fly.
well, if it's in another property in another province, oh my gosh, like what are you gonna do?
Hmm.
Yeah, you're right. Like there's a lot of turnover in that field, and in a
Oh, it's
rural,
tough. It's tough.
in a rural scenario or landscape, it could be catastrophic.
Hmm. Hmm. And
So
some of the cottage investors are finding even cottage investors are finding that out today. Even if they're in like Muskoka or on the East End, like they're finding that out. It's hard to hire people to clean and handy person your properties. A
yeah,
lot of them are getting slaughtered.
yeah, yeah.
So you like six and up, 16 and up prop units. Now bring us to today. You've already taken money out of some of these properties already. Then you hit the 5 year mark.
We're just
Rents.
hitting that. We're just hitting that now. One of them was a VTB, and the owner passed, so we had to exit it. So we replaced it with a RSP mortgage.
Oh, so private. All right.
Yeah, yeah, and this because it's a rural place where there's not a lot of lenders. So if you're going into a tertiary market for your listeners, and the cap rate is delicious, right? Like you're close to like 10%, but
Mm-hmm.
you're running risks, and this is why the banks typically don't touch those cap rates. The top banks, because there's not a lot of appreciation, and because there's not a lot of financing, and there's not a lot of property management. All these things could cripple a deal, right? Like when you're going to get not a pre-approval, but like financing for an MLI Select, they look at four major things, and those are credit score, liquidity, net worth, and experience, right? People think, oh yeah, I'll buy a 16 unit and I'll be fine, but 16 unit requires um, requires like not surveillance, but like eyes on it. Like it's like a business, and it needs to be watched, or like a garden. You really need to watch out, make sure that the weeds don't attack your garden.
Yeah, it's not as passive as some people think or hope.
No, no, and that's another reason why a lot of people are going new. Actually, I think it's like there's not a lot of capex or none for the first 5, maybe 7 years, and so they prefer to have that as part of their portfolio. Or I think having some value adds and some new in your portfolio, like a mix, I think is a I think it's a good thing.
And can you share what private terms look like on private mortgages these days?
Well, it really depends on the money. I think it depends on whether it's registered funds. I see a lot of that registered funds through Olympia. So on a registered fund like an RSP, you might see anywhere between 8 and 12. I think it's starting to come down, and it like as the rates went down yesterday, actually in both countries, which is I think a lot of people do a dance. I don't follow that rate that much. I follow the bond rate, and so I think once when they drop, when things start to drop, and then the registered fund and the private, those tend to drop but slower. Like people that have RSPs, they don't want to adjust as quickly as they should, so they're still maybe asking 12%, and so that's a negotiation that happens between the borrower and the lender. But anywhere between 8 and 12 for registered funds for like a year. Uh, if it's a multi that's making money on a monthly basis, you could get paid monthly. If it's a development thing, then it might be a balloon payment at the end, you know? it really depends on what is negotiated between both parties.
Yeah, for
And
those
if
tracking the
you
U.S.,
manage,
the
right?
20-year Treasury bill is coming down. I was just talking to my friend. He got a new quote for his U.S. rental property, and it's down about 0.7% compared to
That's
what it was about a year ago.
that's a good trend. Yeah.
Yeah,
Good.
yeah, yeah. That's what Trump wants, and what Trump wants, he'll
Yeah.
talk until he gets it.
Yeah.
So what are students doing today then? Oh, sorry. Actually, before we get off get off financing, uh, I've heard mixed things about refinancing apartment buildings. What's your experience been like working with CMHC or lenders? What's your experience like in being able to take money to be able to refinance your apartment buildings?
I've heard a lot of success, not a lot. I've heard some success, some great success stories in the last 30 to 60 days.
Great. Yeah.
But just recently, but there's a lot of malaise, and I feel like CMHC is really worried about Toronto because Toronto market has so much of the inventory that they hold world like nationwide. And if the Toronto condo market tanks and they're holding the bags, it could be catastrophic. I'm noticing a tightening of liquidity. And I would say that as much as it would be exciting to pull out all your money and call it a perfect burr and like celebrate with high fives, I would caution people to maybe not take out all the money out of the building and leave it to a point where you've stress tested the rents because we're noticing rents are coming down nationwide, not just Toronto.
Oh, no kidding, eh?
Yeah, out west in Edmonton, Calgary, those markets are experiencing softening correction of rents. And so when you're underwriting, stress test your rent. And if you're going to do a refi, maybe not pull out everything, maybe leave out a little bit in the deal for the next. I call them pinatas. I call refis pinatas, and leave a little bit of room in there so that there's no cash call or you know some sort of situation like that in the future. But I'm starting to hear it mixed. I'm starting to hear like tightening of liquidity, even though the rates are low.
Yeah, I've heard the same. I've heard the same for about a year or two. It seems like CMHC is I think we all know they've kind of paying way more attention to funding the MLI Select program and funding new builds to
They
create
doubled,
for more supply creation.
yeah, and they doubled. I think they doubled their fees. Like their fees are have increased quite a bit, and that's because they're trying to increase their liquidity, like their margin and their kitty, if you will.
Oh, I actually found that chart I wanted to show you. It was just put out. This is from National Bank of Canada. I was like, I cite my sources and give credit where credit's due. So again, this is from National Bank of Canada. It's using data from Statistics Canada, and then we post this on YouTube. So anyone who's listening, we do post these things on YouTube. I'll include a link in the show notes as well for this article out of National Bank of Canada. Again, the headline is Canada, the industrial implosion,
Ouch.
right? And this looks like about 1980 as being the base year. So then
Okay.
the index is at 1981. Uh, the index is starting at 100, and Canada is currently just over 60. So our industrial investments shrunk by 40% since 1981, while the Americans are approaching 200. So they've nearly doubled their industrial investment versus we've declined close to 40%.
That is,
So kind of like to your earlier point, how are we supposed to fund pensions and government without an economy, without people having jobs and making money and creating value, so we can generate tax revenues?
I would infer from this that a lot of these industrial, investments are have left us and have gone south of the border. And
Or China, don't forget China.
well, China and the tariff thing. I don't know if you want to talk about it. I'm not an expert, but I see why, you know, Trump is pushing those because he's trying to remove or at least charge China for basically the US is their biggest shopping mall, right? Their consumers. And so um, and it takes a long time for the industry to come back, and it's going to take time, right? But I see why he's doing it is to preserve that number on that graph that you're talking about, so that they don't decline, and then the industry goes elsewhere.
Hmm. Hmm.
You
Yeah,
know,
he's trying to protect his customers and his tax base. So if people are going to sell to Americans, he wants it to be American that they're buying, so they can generate more tax revenues and employ more Americans. And not supporting any, I don't support politics. I don't support anybody
same,
unless they pay me at
same,
least. But
same. I just I think I'm like you, where I look at the macroeconomic trends and why, and like what's the trigger and what's the expected outcome, and these things that are being, this tariff war, like God, it's been so draining. Like the stock markets tanked when all this tariff stuff happened at the beginning of the year, and it rebounded. It rebounded just like it did in COVID. Like it's almost textbook. If you look at the S&P 500, it tanked and then it rebounded just as quickly, if not more so this time. And now the market is at a higher. I think it is going to rip a little bit if they keep dropping the rates. People are going to load up. Yeah, next year's going to be a big year, especially down south, because Trump's turning 80. The U.S. is turning 250. I think there's a World Cup. I think there's by-elections too.
by
So
elections will be a big one. Yeah.
you're going to see them trying to get the numbers tickety-boo, and so lowering the interest
Hmm.
rates is going to make everything rip. And there's going to be a lot of massive opportunities, but
Hmm. Hmm.
volatility, so much of it, like all over. I mean, let's not talk about what happened, last week in the States. A lot of volatility and a lot of division, but a lot of opportunity. It's not all doom and gloom, right?
It's not, but with for anyone who follows like the Ben Rabideau's and people who follow economists and whatnot, the economy isn't as good as people think. So my guess is that Trump and really Carney too needs to turn this around. Trump specifically has to turn this around for Americans so that they win the by-elections. And where I'm going with this is, like, for example, I have a friend who sells tech services to veterinarians in North America, and he was even telling me that veterinarian billings are down. I'm like, what?
Hmm.
Like, I thought that'd be something don't people don't skip out on taking their pet to the vet.
No,
He said, well, you're wrong. Veterinarian billings are down. I'm like, the economy's not that good then.
down south
Right.
or here?
He said North American companies, but most Americans are, that there's probably 10 times as many vets in the States that are in Canada. So that's what they sense that. And I've seen it consistently as well. Like in Canada, the unemployment claims are the EI, the insurance claims for our employment are going up. The economy in Canada and the U.S. is not good. The Canada's worse because at least the Americans they're going to be a lot better off than us in the short term, mid term, long term. Anyways, but you mentioned something up earlier because here's the case for investment still. So I mentioned I was with some successful friends. We were talking about what's your number. I think we were talking about this before we were recording. But again, like what's your number? I'm not asking you the question. You can share your number later if you like. So my one friend said 6 million. So I thought let me do some math on this. He also said 6 million, but he also said he's very comfortable with a household income with a household spend of $10,000. Now, note he doesn't have a mortgage anymore, so the principal residence is paid off. They have mortgages on their rental properties, and their living is $10,000 a month. So so I thought that's a cool that's a good number to work with. $10,000 a month, $120,000 a year. So for retirement, let's use you're going to live. The basic number is 30 years. Now it's not going to work for you either you and I, but the point is when you get to age 65, actually even before that, in the financial planning world, in the retirement planning world, there's a 4% rule, right? meaning you spend 4% of your savings and then you'll last for 30 years. Adjust for inflation. Now the criticism was that didn't work because inflation's too bad. So the 4% rule is now 4.7% rule.
Okay. Okay.
So so you spend so you're having to so take an RSP for example, you're having to cash out your investments at a 4.7% rate in the first year, and again for the year after just for inflation, and you'll have enough money to live for 30 years, right? So to use that rate in 30 years and assuming $10,000 of cash flow per month, I haven't adjusted for taxes yet, but you need about $2.6 million dollars to save of savings in order to retire. So that's a number I think everyone needs to strive for. And what do you think the average Canadian has for retirement savings?
It's negative.
I Googled it. It's just over 1 million. That's what the average household has for retirement savings. So to the point you and I were talking about earlier, Canadians have to invest,
Yeah, they have no
right?
choice.
You have no choice.
Well,
Again,
you do have a
you can
choice, but it's not a good one.
not a good choice. Run out of money, not a good choice.
No.
Never retire, not
Yeah.
really a good choice. So yeah, so that leads me to the point like everyone has to invest. Uh,
Yeah.
so now my question to you is, what are you telling students today about what are their options for investing?
Like in terms of how big to build it and how to shape it, I have a formula.
Anything?
I have a
Yeah.
formula of my own. Like I don't like people just giving me a number and saying $1 million a year or $10,000 a month. Or the worst one is like, I want 1,000 doors. Okay. Okay, good. And I never trash talk their goals and dreams ever. It's always like, if this is what they want, then this is what I'm gonna help them work towards, right? I don't say your goals are too big or too small. I prefer to talk about what their lifestyle is going to look and feel like. Like,
Hmm.
let's
Hmm.
fast forward to retirement. What does it look and feel like? Where are you living? How much is it costing you to do all the things you want to do on a monthly basis? Let's try and get a vision of and this is part of manifestation and visualization. What does life look like? Where are you? And how much does it cost to sustain that lifestyle? Oh, it's 10,000. Okay, great. Then let's multiply it by 12, and then I like to divide it by 5% cash on cash, and then I take that number and I divide it by 25% equity. So that's assuming if you so in this particular case, the portfolio needs to be $9.6 million, and you own a quarter, your partners own the rest, and it's performing at 5% cash on cash. It's going to pay you $10,000 a month income, and that doesn't include refis. So the refi is another conversation that's more for wealth building and legacy transfer. But that's kind of how I help them shape. And then I go even further. I'll say that it's 9.6 million, and I'll say, okay, average cost for a new door is 300,000. You need to accumulate 32 doors at $300,000 per door in order to hit your mark. You want to do that in 5 years? You could do that in one building, or we could do it like in multiple buildings to kind of like diversify and scale up slowly, which I think is a more sustainable, comfortable approach. Then you'll hit it. You'll supersede your mark, and you'll still with the refis be able to leave some money behind. And the goal is not to draw down from the RSP or from the savings, but to have something that is like generating income and appreciating over time. And it's one of the benefits of this over the stock market. I'm not pro or con against the stock market. I think they all serve their purpose. But if you have some of your money here and some of your money there, then you're taking advantage of the refi, which is a big one. And you talked about the rule of four. What was it? The 4% rule,
4.7.
7% rule. I'm a big proponent of the rule of 72, which says if you take the interest of the investment, if you divide it by 72, the answer is the number of years it takes for your money to double, right? So the inverse is true if the rate of return of the or the rate of inflation, it's not 2 point whatever what they're saying. It's actually
Yeah.
probably 5-6%. If you divide 72 by 6, 12 years, in 12 years, your $1 million is only going to have $500,000 worth of purchasing power. You need to invest. You need to
Yeah. The
invest.
saying I like to throw out there, just generic saying, is choose your own hard asset. Just please get some.
Just get something. It's not
I
about
like
timing.
self liquidating assets.
It's not about time in the market or timing the market. It's about time in the market, and you gotta. Best time was what, yesterday, and the second best time is now.
Now's not a bad time.
No, there's time. There's
If someone
opportunities
was
out there.
timing the market, I don't think time now is a bad time at all for real
No,
estate.
it's not. It's not. Yeah.
I was actually discussing with a friend who does like index funds, and like now's not a bad time to rotate some of that money. So also like understand that he has a lot of index funds versus very little real estate. So it's a rebalancing also makes sense, and also again for timing.
Yeah, it's a good time to get some winning, trim some winnings and put it into something else, like I would have this the inverse would be my approach where I would basically have the majority of my money in real estate, and then when the refi comes, maybe dump some of that into the market or some of that into crypto. I'm not a big crypto guy by any means, but it's another discussion we cannot avoid. It's not a question of when, it's a question of, sorry, it's not a question of if, it's a question of when.
Hmm.
And so AI and crypto should be discussions that families are having with their kids at the dinner
Hmm.
table on a
Hmm.
regular basis.
It's funny because we used to run a course called Stock Hacker Academy. Where we talked about very boring investments and we selling options and whatnot. A lot of my past students were telling me how well they've been doing stock hacking with Bitcoin related stocks. So that's inspired me to do a little to dip my toe back in.
Good. Yeah, it's important. It's a conversation that should not be avoided.
Yeah,
And I,
I don't think we can avoid it. The Bitcoin seems to be here to stay, just like AI.
yeah,
Now you're talking about the states up for opportunity as well. What do you see as the opportunity in the states versus here? You live in Ottawa, elbows up. Let's which is also hilarious because Canadians are buying U.S. stocks at a historic rate,
is that
right?
right?
Never have Canadians bought more U.S. stocks in history. And Canada Pension Plan just announced a $700 million investment to buy to build rental properties around Atlanta, Georgia. Right?
Hmm.
They just announced it. So hey, elbows up. And then for just out of curiosity, I checked: does CPP own any residential in Canada?
No,
No, they don't.
no.
Do you think they'd ever want to own it in Ontario
And they own
and,
and they
and
own
end
and
up
they
at the
own a bunch.
LTB?
No, and they own a bunch of crypto, and they own a bunch of like options, and they own a bunch of American equities. It's big, like I'll say Bitcoin again. Like they own a lot, and they spend a lot of money rebalancing their portfolio or their like a lot. They manage like crazy, like, and apparently it's not performing as well as some other funds that are have very little management, and they're just kind of like leaving it alone.
It's different. The CPP has
It's
to do with
different.
conservatives. I get it. So they have different investment goals than we do. I get it. They have to protect their
Yeah,
investment. But yeah,
yeah. Alarming that rate that you just that information you just said about Canadians buying American stocks. Crazy.
yeah. And so you've seen what we offer at Share as well. Like we actually try to make real estate investing as easy as owning a stock, but not to plug our own business. But what which is funny because Andrew and I were I told you before Andrew and I were presenting at Thomas Laurini's coaching group. You're supposed to be the Canadian multifamily guy. what are you what, what are you telling students about the states investing?
I tell them to choose wisely and choose one or two markets and just zero in on them and really know them extremely well inside and out, and
Hmm.
try to and build a team of professionals. And the property management talk is a big one because I've heard a
Hmm.
lot of people getting burned in Cleveland. And I would say just I tell them to like really understand the market, the nuances, because in in cities like Cleveland, you'll see an neighborhood right next door to a D or an E neighborhood, and you really need to understand those situations, those nuances, and you really need to understand the contractors and the property management situation greatly. And then I tell them make sure your structure or your tax reporting mechanisms are like done before you go shopping, because it's an investment. It could be upwards of $10,000 to set up corporate structures or more. And I just tell them to do their homework, and then I tell them to try to pick a red state, and really understand that market and start building teams to so that it in your case with what you offer, it's you're basically doing all the research for people, and then people are just picking and choosing like the location, which is it's really nice. It's really nice because you're fulfilling a lot of that gap, that research that needs to you know take place. And you guys have a lot of experience with like real life, real time, you know, turnover and strategies. Last time I went to see you were talking about the sub two. That's something you don't hear a lot of here. It's not a thing. But down there it is. Section 8. Like there's a lot of other things down there.
Hmm.
The 1031 exchange. Like there's a lot of different things out there. Financing is a lot different. I'm not gonna say it's better. It's just different. And people need to become educated because a lot of Canadian investors think, oh, the States is the best. It's gonna be great. I'm gonna be
Hmm.
rich. You better choose wisely.
Better choose wisely. Actually, let me just share this with you. It's funny because you and I were talking about how people want to leave here because of crime rates, and then you and I both know a lot of people going to Cleveland, and just a quick co-pilot query to compare crime rates in Cleveland versus Ottawa, where you are, Toronto, where I am. Like you see the violent crime rate.
Look at that.
Cleveland's
Ottawa's
all.
More violent than Toronto.
I can see why all these elbows up, and I don't know.
Oh my gosh, that's more shocking. Like, okay, yeah, Cleveland's got
But
a
look at Cleveland. Cleveland is
double.
almost double the violent crime rate of Toronto. So my point is when you mentioned like Cleveland, I've had my friend who's been on the show, Carlos, like he even mentioned like crime rate's way higher. There's property managers that won't manage his properties.
Right.
So it's different, right? People have to understand America's a big place. Does Ottawa have rough areas? They're not
Yeah,
that rough. Dude, I'm used to Hamilton. Hamilton has rougher areas than
yeah, you're
there
right.
can't be anything close to rough area in Ottawa compared to Hamilton.
No, you're right about that. You're right about that.
Right.
The different levels of rough.
Right. But like Ohio and Cleveland, I know Cleveland's in Ohio, but like all the major cities of Ohio have pretty rough areas, much rougher, right?
Yeah,
And that's
I'd
my
be more.
concern is,
Yeah, that it is. It's especially for people where you live because they're in the GTA and they think, well, I could just drive down there in 4.5 hours, and
yeah.
that's why I like Cleveland. But maybe you should look at a different place with different metrics, like
Hmm.
Texas. Where it might be safer, might not. But you really have to look at a lot of different factors, and
Hmm.
crime is one of them.
Hmm. Yeah, because I've had lots of experience with rough areas in Hamilton. It's actually funny. I was golfing with some friends of mine who were in St. Catharines, and they were telling me how they got robbed for $10,000 worth of tools, and someone stripped their brand new air conditioners of their condensers. So just thousands and thousands of dollars of losses. Now, the areas that we're talking about, like Cleveland, are way rougher.
One of my students was doing a flip, and it was like a duplex up down, and they broke into the upstairs to steal the brand new installed refrigerator
For a fridge.
or a fridge. And the reason why they didn't take the stove, I think, is because they were interrupted. And I said to him, "You better get a camera and you better get an alarm because they're coming back for it tonight." And luckily it didn't happen again. But like a
Hmm.
fridge, like this is the biggest possible
It's
item
so
in the
heavy
home.
to
It's
get
so
that thing
heavy,
out of there from the second floor.
right? Exactly. So, and it wasn't in a a D or an F neighborhood. It was probably in like a C neighborhood, and it's probably a case of the contractors tipping somebody off, and
Hmm.
it's usually an inside job, not a
Mhm.
pleasant conversation.
Earlier you mentioned like you're comfortable with like a 5-6 cap rate. So we're consistently our share clients are in the states are consistently doing 5 to 7 cap rates. What do your students say to that? And is that not enough for them?
No, I think that would be great for them. Yeah, I think that would be great. I think that would be right. Like, and it's something that falls in line with their goals of that $10,000 a month goal. Like if you're getting a higher cash on cash than the 5% I'm conservatively factoring into my formula, then they'll reach their goal a lot faster. Like, let's face it, wouldn't if you could have more than 10,000 a month, would you do it? Well, yeah.
Depends
Yeah,
on what.
I think they need to understand like the management and the relationship with, like for example, you and share, and they would need to know like what's involved from them and what they're going to get in return.
Hmm.
And
Hmm.
they might see a lot of value. I think a lot of investors try to go through the flipping route because it helps them get their visas faster, their E2 visa, because it's money that's basically, I think it's called money at risk, basically money that's being left in the US for, parts and labor. And so they'll tend to go towards a flip to try and satisfy that that visa requirement. But the your structure is like hands off, and so the investor is going to have that type of philosophy as part of their DNA. If they're used to being, you know, the jack of all trades that does every single thing from A to Z, and then they're basically saying, "Okay, share, take the keys," they're not going to be like comfy because they have to learn that trust, the
Hmm.
element. And but it's an education. It's an education and showing the track record and the success, the scoreboard, and what the services offer them, uh, that they didn't have before when they were doing everything themselves.
Hmm. Hmm. But kind of like you said earlier with your in-laws, like you kind of cap out much faster if you're hands on.
Yeah, I mean, maybe I shouldn't be targeting Italians, but like it's what I know. My wife is Italian, and they don't like to hire property managers. They don't like to invest in multifamily with several investors. They're just kind of like the horse blinders. They're just like buying one or two or three, as many single
Hmm.
family homes as they can,
Hmm. Hmm.
and they usually get maxed out because their debt to income ratio hits, or they just simply can't manage another property.
Right.
Like they run out of time or energy or patience.
Versus our chief financial officer over share, she owns over 70 properties, all single family homes, and she hasn't seen any of them before.
That's the power of property management and strong systems and
Yeah,
people.
but it can only exist in the states, right? Like
Right.
that type of property manager doesn't exist in Canada. Like no
Why
property
do you
manager in
think?
Ontario can evict a tenant if they don't pay on a
Oh,
timely basis.
I was gonna ask you, why do you think that is? And okay, you hit the nail on the head.
A
Property
PM can run a
managers,
proper business in the states, right?
yeah,
And
here
in,
they're
in the
trying
in the
to.
land in the landlord friendly states.
Here they don't have that clout. They don't have that power to evict and to really manage because it's all about, like, it's called property management. But if the older the building gets, the more it becomes about people management. Just because the tenant class is going to be more high maintenance, my
Hmm.
opinion.
Also,
So
culturally, like the states is so big. People always ask me all the time, why don't if it's so cheap, why don't people buy? And I said, well, you have to understand, like they have so many cities with a population over 1 million or 2 million, and so my point is they have lots of places to go to work. So people generally will, when they move to a new city for a job or whatever, half rent, half buy,
Hmm.
and the half the rent they can rent for me because and again often people leave, come and go. It's much more transient than it is in Canada. Hence, you have a much larger demand for rental properties.
Yeah, completely different demographic and trends.
Yeah, and again the pricing is just completely different as well.
Yeah, in the US, there's 51 cities with a population of 1 million or more. And so in Canada, it's going to be what? It's going to be like three or four, five.
Over a million?
Yeah.
Even Edmonton's over a million. So Edmonton, Calgary,
Call it six or seven.
yeah, not many. Because even
Yeah,
Ottawa GTA is over a million.
yeah,
Sorry, Greater Ottawa area is over a million.
that's right.
But that's our national capital.
Isn't that crazy? In China, it's 500 cities with 1 million plus.
Yeah, yeah. How many are 10 million plus though?
Monsters.
Yeah,
Yeah,
same in South America. How many are 10 million plus? It's just so different. Yeah.
yeah, 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 yeah. That's another area I'd like to visit South America.
Hmm.
Never been. It's very intriguing to me.
So, Luis, what do you think your next investment's going to be?
I really like self-storage. I really like self-storage, and I really like Texas. That's probably going to be that's the area I'm focusing on. I'm researching, and I'm trying to bring myself up to speed and see what the trends are, population trends, and how does financing look like for and refinancing look like for these kinds of assets. I'm looking for something that's automated. Uh, you know, no toilets, great. If it can be managed remotely with automation, great. If somebody doesn't pay the rent, you just cancel their fob and you. I like that. I like care homes as well. I think in Canada that's going to hit a cap rate of like double-digit cap rate if you do it right. I hate to say this, but it's basically anything that doesn't involve a rental control board is probably something that I'm looking at. But I
Which is
think
over half of the Canadian population.
and so the
Between
U.S. and
BC, Quebec, and Ontario, that is well over half of the Canadian population.
so many provinces, Manitoba and Nova Scotia have very strict rental control boards, and so very limited in what will cash flow and what will be worth it. And you said even earlier, like we're taking so much risk on to provide housing, and you know we're protecting them from inflation, being forced to protect them from inflation.
Hmm. Hmm. We weren't asked to, and no one thanks us.
No, no, no. But did you go to that missing middle thing last week?
No,
Or
I was at the as a charity golf event, not charity golf. I was at the Danielle and Corey's golf event.
I heard that some mayors showed up to talk, and they're painting a picture of like housing starts and all these great things that are happening or about to happen, but that's not really what the truth is, you know. And the development charges is a big thing, right? Like I know that there's potential to bypass some development charges, but if those are removed, then these municipalities are going to want to replace them with something else.
Hmm. Hmm.
What do you think about? Can I ask you questions?
Sure.
What do you think about the rumor or the fear that they're going to start taxing capital gains on principal residences?
I wouldn't be surprised. I wouldn't be surprised if there's a wealth tax coming. I actually think there will be because something has to replace what was in the Liberal budget when Trudeau was still in power, with the increase of the inclusion rate of capital gains. So yeah, I think something's coming. Again, that's just the nature of this country. We don't generate enough tax revenue because our economy is not
Robust.
there. It's weak.
Yeah.
Yeah. So austerity is coming.
Austerity. I haven't heard that word since Greece. Remember the Olympics, and then they had these riots because they were pushing austerity on the Greek people. I haven't heard that word since then. But it's the austerity is already here, man. Like we're
Hmm.
like the tax on gas is tax on
Hmm.
top of tax on top of tax. That's what's gonna hit your inflation, right? Like the cost of moving goods around and
Hmm.
operating machines. It's gonna
Hmm.
cripple.
Yeah, England's looking at raising taxes. France is in trouble as well. They're looking at cutting 2 statutory holidays.
Oh wow.
Yeah. How else do you improve productivity?
Hmm.
Yeah. The Western rich countries are in a lot of have a lot of issues. But again, like it's all the data is there. Whose economy is going to outperform? So
If you could move, you relocate your family somewhere else, where would you choose to go?
I've hung out with enough affluent people that they typically have 3 places that they visit regularly.
Ty Lopez. I follow Ty Lopez, and he's a that's a big thing for him. He's got his three places, and he's just circling between all three,
Hmm. Hmm.
and
I
each
also
one
find
has
it's partly cultural as well. Like
yeah.
I've been hearing a lot of people of European descent going back to wherever their family's from for the winters at least.
Hmm.
One of my clients, their parents retired to Portugal. They were Portuguese. Yeah, there's lots of people in Florida, for example,
Yeah,
West Coast. They go to Arizona, whatnot. But yeah, there's a lot of people who I don't think will stay here because again, it's not so affordable, and the weather's what it is. Um, but yeah, Cherry and I plan on being here at least until the kids grow older. We may spend more time in Asia. We really enjoy our time in Asia.
very cool.
Yeah, and
You
yet, so again, I find it's often a cultural thing where people tend to go.
Well, I went back home to Nicaragua this winter. I spent 3 months there, and my wife was born and raised in Ottawa. My boys, same thing, and they did well. They enjoyed their time, which was a huge surprise to me.
Yeah.
I didn't expect it to be as successful as it was. It
Hmm.
was very simple, simple life, and different speed.
Yeah.
And I think that's what a lot of people will move to Costa Rica because of that speed. But I
Hmm.
heard I heard that a lot of expats leave Costa Rica after like 3 4 years because they're just bored. They can't they miss the hustle and bustle of the big city in North America. So
Hmm. Which is why I think the 2 or 3 quote unquote homes
Mhm.
is the thing. It's because nowhere is perfect. I think we all know no one's perfect. But I want to ask you about back home in Nicaragua. How is the cost of living?
Oh man. So I wasn't in the capital most of the time. I was in the in the coast where the beaches are, and cost of living is a lot cheaper, and a lot cheaper than Costa Rica, and you get a comparable cost, like quality of life. Costa Rica is quite a bit more expensive, and I think in Nicaragua you could live like a king if you retired with a Canadian pension, and that's what a lot of people are doing,
Yeah.
and they're looking at things like violent crime rate. I think if you look at the violent crime rate of Nicaragua, you'll be shocked, right? People think, "Oh my God, it's probably so dangerous there." It's not.
Mm.
It's not dangerous. It's actually one of the safest countries in Latin America, and yeah, I mean, just look at what's happening in El Salvador. I think El Salvador is going to be a model that a lot of other countries are going to start to mimic, and it's gonna. The president's trying to turn it into a Singapore someday. Tall order, of course, because of all the money that would be involved. But at least he's got a goal and a swim lane that he's trying to go towards. And I think a lot of countries not only will copy it, but they need to. They need to copy it. They need to attract capital and foreign
Low
investment.
tax. Low tax will do it.
There's
Fifteen and a
zero.
half
There's
percent, I
zero
think it is.
tax for foreign investors, and if you make your money remotely and not inside of El Salvador, you will pay no. Your corporation will pay no tax. Let that sink in.
Yeah. Let your neighbors know in Ottawa, Parliament Hill, what they're up against. Elbows up. Support Canadian. Buy Canadian housing. A 2 bedroom condo is $600,000. Yeah, no problem. Luis, any final thoughts? So you've been so generous with your time. Any final thoughts you want to share with the listener, especially anyone who's struggling right now or thinking about getting started?
I would say get educated. Follow people like yourself who are always looking out for the little guy and trying to paint a very realistic picture, not a fear mongering picture or an idealistic picture, a very real picture based on facts. Get yourself a mentor, follow somebody, and become part of a community, like wherever that is, somewhere where you feel safe and like protected by the numbers, protected by the herd, and try to design your life on your own terms, like your future, so that you can pinpoint exactly how big you need to build it. Don't just arrive at the end and say, "Oh shoot, I completely like." It's the equivalent of driving to Florida without a GPS or a map. Right? You need some sort of plan. So educate yourself and apply the knowledge. Don't just sit there and hoard the knowledge. Apply it and take action.
And then, can we talk about your coaching as well? You were a certified real estate coach. You were a head coach at Wealth Genius as well.
Yes, yes,
Where can
yes.
people get more information?
Yeah, they can send me a DM. They could find me on Facebook or on Instagram, cashflow.rivas. And I also have a YouTube channel. They could connect with me there, same cashflow.rivas. And we have different packages, and we can teach them even about the USA side, as you know, like you were on our sister group's mastermind the other day, and really pick and choose what it is you want to learn, and then we can assign a coach based on your personality and on your trajectory, your goals, so that your coach is basically tailored to you. It's not just you try to fit into the coach. No, the coach tries to fit into what your personality and your goals are, because everybody is different.
Can we talk about the Expand conference? Because I'm going to be
Yeah.
there.
Expand conference is coming up at the end of October, October 31st, November 1st and 2nd in Mississauga. And we bring a vast array of speakers. It's not just real estate, it's predominantly real estate, but we talk about things like options trading. We talk about things like infinite banking. We talk about the US a lot. And so people can come and learn, and people can come and network, and people can come and have fun, like a lot of fun, you know. So
Yeah, I know the energy at Wealth Genius. It's usually high.
yeah, we're kind of loopy sometimes, but we're like a tribe. We're really tribal.
And can people still book a call with you?
Yeah, yeah, definitely, absolutely. Yeah,
Fantastic. All right, Luis, thanks so much for doing this.
thank you, Erwin. Appreciate you.
All right, friends, that wraps up another episode of the Truth About Real Estate Investing show for Canadians. Hope you got as much out of this one as I did. Remember that whether you're just starting out or a seasoned investor, there's always something new to learn, and it's always about building that practical knowledge base that gets you closer to financial freedom. If you found value today, please do us a favor and leave us a review or a rating, share this episode with a friend, or better yet, join our community of real estate investors who are taking action and making moves. And hey, if there's a topic you want us to cover, or there's a certain guest you'd like us to have on the show, drop me a line. My DMs are open on social media. Reply to this email that this has arrived on. I'm not hard to find. You know, we're all about getting you the unfiltered truth to help you on your journey. Thanks again for tuning in, and we'll see you in the next episode. Until then, stay smart, stay curious, and keep building that future. Catch you later.